Hello guys, welcome to my YouTube channel. My name is Isa Kamaldin and this is the channel where I come to document my life, and this is also the segment of the YouTube channel called the Train Trades episode where I come to analyze the forex markets give you guys the potential trading opportunities in the market. So we are currently going to kick off with the NCD USD. Um we are going to get up with the NCD the weekly time frame. So what's happening on the NCD weekly time frame? As you guys can see, like the market picked this resistance level and got rejected from it. Although we've been in a range lately, but it is what it is. The market rejected from the resistance level, and if we like when a market rejected for is being rejected from the resistance level, the next level target for it will be the next support level, which is this line here. I don't know if you guys can see my arrow. So this is the next level target for it based um on the support and resistance law. And if you guys can see, I drew my Fibonacci level from swing guy to swing low, and the golden zone, the 0.618 level, it is right on that spot. As you guys can see, it is right on that particular spot. So so that's another confluence for us to confirm that yes, the next level target for SCD will be 0.5600. So that's it on the weekly time frame. We've been having the market has been in a range since about March of last year, and that's due to the US dollar, because the US dollar economy, I won't say it has not been actually doing pretty well. So that's why the market has not been trending. We've been in a range, so I'm still anticipating for the market to come to 0.5600. Although it might take a lot of months for the market to get there, but trust me, the market is going to do just that. But in case the market didn't do that, or in case the market picked this resistance level again, before we can change our bias, it has to be when the market has break above this level, which I doubt strongly, which I strongly doubt. But it is the market. We don't have control over anything. Our job here is to analyze what we see on the market, and make a trading decision to it. So that's it. For us to change our bias, the market has to come and break over the this level, which I strongly doubt. So in case of that, the market hasn't done any of that. So our next level target for NCD will be 0.5600. So that's it on the weekly time frame. So let's go over to the daily time frame. So what's happening on the daily time frame? As you guys can see, this particular where the we are at the top of the range. So the market has been rejected a lot of times, countless times, from this bottom of the range. As you guys can see, the market has rejected a lot of time from it. So it has rejected from it once again right now. So but one thing I noticed that this is an higher high, this is an higher low, this is an higher high. The market is supposed to come here for higher low, but the market didn't do that. The market broke the structure. And if you guys know, whenever there is a break of structure, that means the market is about to change the trend. Although there are also other conference for us that we will have to add for us to be totally sure that the market is ready to change the trend. But it is a slightly an indication for us. Whenever there is a break of structure, it is slightly confirmation for us that the market is ready to change trend. That is, you as you guys can see on the daily, the market has been on uptrend partially till when it peaked this the top of this range. So the market broke the structure around there, so it's formed something like at the base, at the neckline, because this seems like a right shoulder head to me. So it is more or less like an head and shoulder pattern. So we have to wait for the left shoulder to form for us to confirm that yes, truly this is an head and shoulder pattern. So what we just have to do is that we are going to wait for the market to come back to this level, to retrace to this level here, to Sorry guys. So we are just going to wait for the market to retrace to this level here to form the left shoulder of it. Then we are going to jump in. Once the market retrace up to this level, then we will ride all the way to the neckline. Then if we are very being lucky, the markets break the neckline straight away, then we are going to ride all the way to the upside. So I'm just going to go over to the 4 hours time frame and show you how we can get some more trading opportunities. So as you guys can see, I'm supposed to have entered from here, but due to some, I don't know, I was just waiting for like a more clearer conversation, confirmation at the time, because at the same time, if I should enter from here, this is the next level target, because I didn't know that the market is going to break the structure. I will just have to react after the market. I don't. It is all being a forex trading. Yeah, a forex trader is not being proactive. It is being reactive. You have to just react to what the market has to do. You don't have to be proactive, because if I should be proactive and I enter the market from here and the market get there and spike all the way to the upside, what do you have to do? I don't, because this it has violate the rule of structure. But yeah, the market has break through the structure. What I will just have to do to get into this trade is to go is for the market to retrace up to this level here. And if I should use my Fibonacci from swing high to swing low, you guys know I like to use this Fibonacci tool a lot. It works like magic, so that's why I use it a lot. So, and if I should place my Fibonacci level from swing high to swing low, as you guys can see, it is right on that spot too. So which is something very very interesting that I'm waiting for. Like this will be, if this trade should come, this will actually honestly be a very juicy trade. This will honestly be a very juicy trade, trust me. So I'm just waiting for the market. This will honestly be a very juicy trade. So I'm just waiting for the market to retrace at up to that level. Then once the market retraces up to that level, we are just going to get in and we'll size in, we'll capitalize on the trade on our way down. As you guys can see, there is also like a minor level that the market has reacted to a lot of time. That's why I use a very straight line to indicate it. So once the market retraces up to this level, we are going to enter. Once we break this minor level two, we will capitalize on the trade. So there is a lot of money to be made all the way to the downside. So we don't have to rush. All we just have to do is to sit on our hands and wait for the market to retrace. So I'm just going to go back to why the US dollar has been ranging since last year. So I'm going to give you guys the fundamental analysis to it, and we'll see what's happening fundamentally on the pair. So what I so the three this is my fundamental analysis spreadsheet. The five things that actually moves the forex market is the unemployment rate, the interest rate, the inflation rate, the GDP growth rate, and the market sentiment. That is what's the market. What do I mean by the market sentiment? The market sentiment is what other traders are feeling about the market at the moment. What I mean is that the hedge funds, the institutional traders, the bank traders, and the retail traders like us, that's just what the market sentiment means. What they are feeling about the markets. Probably they are long, or they are short, or they are neutral on that particular pair. So that's what the market sentiment means. So we are just going to kick off with the fourth thing, which I said actually moves the forex market like fundamentally, is the unemployment rate. So the how the value of a currency also determined by the rate of unemployment. You guys know, like if there is a lot of unemployment in a country, they won't have enough money. Like citizen won't have a lot of money to spend for the economic growth. I don't know if you guys understand me. Citizen won't have enough money to spend on the economy. There won't be much taxes paid. There are a lot of things that they won't get to do if they are unemployed. So obviously they won't have money to spend. So if there is an high rate of unemployment, that leads to currency depreciation. And if there is low rate of unemployment, that leads to currency appreciation. So how are we going to use it with the two pairs that we are trading? So how we can get to use it with the two pairs that we are trading is that we are going to we are the that means the two currency that we are trading, assuming okay, in this case you are trading the New Zealand dollar and the US dollar. So the one with the highest number of unemployment rate, which is the New Zealand dollar, that's 4.60, is the unemployment rate is actually depreciating the New Zealand dollar compared to the US dollar. Although they are both being affected, but although they are both being affected, but there's something called divergences, like which one is more affected. That's what we want to know. I don't know if you guys understand me. Although the two is bad, but then again, which one is more affected? The same way, the other way around, if the two is good, which one is more good than the other? So that's how we can get to, and that's how our fundamental analysis is done. It's based on divergence. So in this case, the the US dollar is doing well, is doing pretty well compared to the Zealand dollar. As you guys can see, the rate of unemployment for US dollar is 4.10%, and the rate for unemployment in New Zealand is 4.60%, and it is still trending upward. So the like trending upward means like there's still a potential that it will go higher, because it has been going higher lately. That's why you can, as you guys can see, that it is trending upward. So like there's still a potential for it to go upward. So that's it on the unemployment rate. So about the interest rate, what's the interest rate? Interest rate can be very um can be very, like, I don't know how I'm going to put it, but interest rates can be very confusing. So but in what sense? Actually, there's an higher interest rate, whenever there's an higher interest rate, the currency tends to appreciate a lot. But whenever there is a lower interest rate, the currency depreciates, because the money, the the investors won't invest in that particular currency. But when there is an higher interest rate, um investors will invest in that currency. What I mean is that, assuming currency A is at I'm just going to use the currency we are trading, like like as it is now, the US dollar has 5% interest rate, and the New Zealand dollar has 5.25 percent interest rate. Assuming both of them are holding interest rates, the New Zealand dollar in this case is appreciating more than the US dollar. But in this case now, as you guys can see, I wrote trending down. That is like there is the US dollar has just cut their interest rates lately. So there, and the news for the New Zealand will be tomorrow. So there's a there is 90% chance that they also cut their rates. And if they should cut their rates, that is, the US has already cutting the rates, and we've seen like this the move in the market already. But if the New Zealand if New Zealand should cut their rates, it is going to affect the market. So in this case, the interest rates for the in this case, with the divergence, the interest rate for US dollar is pretty much better to the New Zealand dollar. Although they are yet to cut the trade, anything can happen. They can hold the interest rate. They might not cut, but then again, with the 90% probability chance that they are going to cut, it will still have an impact on the markets, because due to the interest rate is due to the monetary policy and due to the data that happen. There is a lot of unemployment rate and other things like the CPIs that also has an impact on the interest rate, on the monetary policy. So there is a lot of things, but I don't want to digress a lot. There is 90% probability that they are going to cut that the New Zealand are going to cut the rate. So in this case, why the US dollar are currently holding. So in this case, the US dollar is in a much better place than the New Zealand dollar. So what's about the interest rate, the inflation rate? As you guys can see, the although the inflation rate for US is much more lower. That is when, what's the meaning of interest rate? Like inflation rate. Inflation rate is the cost of buying stuffs, but cost of buying stuffs in the US is at a very smaller percent, which is 2.50, which is near to the central bank target, because the central bank target for inflation is 2% every year. So it is very very near to the 2.5%, to the 2% target. So I don't actually see the inflation rate for US going higher. I don't know. There might be another thing that is happening. There might be another data that comes out for it to go up, but currently it is at 2.5, and why the New Zealand is at 3.3. Although the New Zealand is trending downward, that is the inflation rate is coming down, which can aid the currency to appreciate. But then again, the inflation rate for the US dollar is at 2.5. That is, the US dollar is at much more better place than the New Zealand dollar. And if with the GDP growth rate, the US is at 3%. The growth rate is that where whoever has the higher whoever has the higher growth rate is with the one with the much more like whoever has the higher growth rate will have much appreciating currency value. I don't know if you guys get me. Assuming the like as it is now that the US dollar has 3.0 percent growth rate, and why the NCD has a negative growth rate, and which is still trending downward. This just signifies that the US is at a better much place than the New Zealand dollar. So we've analyzed. There is I'm yet to get my COT report, the COT reports. I'm still waiting for. There is a website where I used to check what the market is doing, the volume of trades that the commercial banks are trading, the hedge funds, the volume of trades they are placing on the. I do check it as Chicago um um merchantine exchange also. I can't really remember it, but there is a link that I used to check it. So they publish the report every Tuesday. So I'm just waiting for the report tomorrow before I include it here. But we've already analyzed about four things out of the five, which signifies that the US is in a better position to the NCD dollar. And if we should go back to our technical analysis, you can see that the US is in. We've done our analysis on the weekly time frame. We've seen that the US is at the better place compared to the New Zealand. So what we just have to do is to wait for the pullback on the New Zealand dollar. The time is about to run out, so I'm going to come back here on weekend to give you guys another video about what's happening currently, and also probably if time permits us we are going to analyze another pair. So that's it on today's video, on today's trade trends episode. This is episode 16. So thank you guys. Bye.